If a modern banker loses your money, they are fired. But in the bustling marketplaces of medieval Italy, the punishment was much more physical. Early moneylenders conducted their business sitting on simple wooden benches. In Italian, the word for bench or counter was banco or banca. If a banker failed to meet his financial obligations to his clients, the public would physically smash his bench to pieces, signaling to the entire market that his business was dead. The Italian phrase for a broken bench is Bancarotta. Today, we pronounce it bankrupt. Welcome to the Banker's Desk. Today, we are tracing the incredible evolution of the banking system, from ancient religious temples to the modern financial empires that run the world.
To understand banking, we have to look at the Doubleday Dictionary's definition. A bank is an institution for lending, borrowing, exchanging, issuing, or storing money. And the very first institutions to do this weren't on Wall Street. They were in ancient Babylon, over 4,000 years ago, around 2000 BC. In those days, there were no steel vaults or alarm systems. If you had gold, you were a target for thieves. The safest place on earth to store your wealth was the religious temple. Temples were constantly attended, structurally fortified, and most importantly, they carried a divine deterrent. Stealing from a temple wasn't just a crime, it was an act against the gods. Because they held so much of the public's wealth, temple priests eventually became the world's first loan officers. Historical records show Babylonian priests lending out stored gold and silver to merchants at high rates of interest. 1,500 years later, the Greek temples followed the exact same model, acting as massive depositories and lending funds at interest. As empires fell and the Dark Ages swept across Europe, banking as a formal business almost entirely disappeared. The Christian Church held a deep prejudice against the practice of charging interest, effectively outlawing it. However, the Jewish population was not bound by church law. Jewish merchants kept the money-lending business alive, setting up their famous benches, their bancas, in the marketplaces of Lombardy, Italy. They dominated the financial field for centuries. But as global trade exploded, the world needed something bigger than a wooden bench. We needed institutions. In 1401, the Bank of Barcelona was established, widely considered one of the first true organized banks in the world to accept deposits and pay agents. Even earlier, in 1157, the Bank of Venice was formed. Though it acted slightly differently, it was created specifically to take over the public debt caused by Venice's many wars. Fast forward to colonial America. The New World needed capital. In 1782, the Bank of North America became the first modern bank in the United States. But banking was chaotic. At the urging of Alexander Hamilton, Congress chartered the first Bank of the United States in 1791. It held government deposits and tried to discipline smaller banks that were issuing too many paper notes. However, people deeply distrusted centralized financial power. They thought the bank had too much monopoly control, and its charter was not renewed. This led to an era of free banking, spearheaded by states like Michigan in 1837. Suddenly, anyone who met basic requirements could open a bank and issue their own custom banknotes. It was a disaster. There were too many different types of money in circulation. Banks issued more notes than they had gold to redeem. The system was fundamentally unsound. It wasn't until the severe economic depression of 1907 that the United States realized it desperately needed a centralized system to stabilize the economy. After years of intense debate, President Woodrow Wilson signed the Federal Reserve Act in 1913, establishing the central banking system that still governs the U.S. dollar today. Simultaneously, this highly organized commercial banking structure spread globally. Throughout the 18th and 19th centuries, organized banking replaced indigenous systems worldwide. For example, the massive expansion of the Presidency Banks in India, from the Bank of Bengal in 1806 to the eventual creation of modern central banks across the subcontinent, proved that commercial banking had become the absolute backbone of global industry. Today, every advanced nation relies on a highly developed banking system. The physical benches in the marketplace are gone, replaced by digital ledgers and central bank algorithms. But the core business, lending, borrowing, and the vital importance of trust remains exactly the same as it was in the temples of Babylon 4,000 years ago. If you want to master how these modern financial institutions work, make sure you subscribe to the Banker's Desk. See you next time.